Okay, let's dive into this. Welcome to today's explainer. We're looking at the absolute explosive 2026 run of ARM Holdings. We're going to break down a really comprehensive SWOT analysis of this fascinating company, and more importantly, we're going to explore exactly how they are perfectly positioning themselves right smack in the middle of a massive AI infrastructure boom.
So here is our mental roadmap for today. We're going to unpack the 104% rally, look at some record-breaking fiscal numbers, and dive into the AI data center shift. But, we have to keep it balanced, so we'll also run through the risks, do some reality checks, and outline exactly what to watch next. The 104% rally. 104%. Let that sink in. That is the staggering year-to-date return for ARM Holdings. It's a surge that has literally captivated the entire market this year. Following some massive news back in mid-May 2026, this stock surged 42% in just a single week, hitting a peak of around $298. I mean, wow. So what was the primary trigger for that massive rally? Well, it hit on May 20th when NVIDIA dropped a major disclosure. They projected roughly $20 billion in CPU revenue for their fiscal year 2027. The absolutely crucial point for us here is that the vast majority of this projected revenue comes from NVIDIA's Vera CPU, which, you guessed it, is built squarely on ARM's ARMv9 architecture. The market instantly did the math here. Every single Vera unit shipped pays ARM an ARMv9 rate royalty. Boom, a $20 billion catalyst right there. Section 2, record-breaking fiscal numbers. Now, the stock price hype is one thing, right? But the underlying financial engine here is just firing on all cylinders. ARM has posted 3 consecutive years of greater than 20% revenue growth, culminating in a full-year fiscal 2026 total of $4.92 billion. Let me tell you, it is exceptionally rare for semiconductor IP companies to hit that kind of growth cadence at this massive scale. Drilling down into the specifics of that record Q4 fiscal 2026, the breakdown is super fascinating. Total revenue hit $1.49 billion, up 20%. But licensing revenue, that's where the real heat was. It completely led the quarter, surging 29% to a record $819 million. Why? Because of massive, multi-billion-dollar AI infrastructure license commitments. Meanwhile, their royalty revenue showed really steady strength too, coming in at $671 million. Section 3, the AI data center shift. All right, this is where we really see the narrative start to transition. ARM is shifting from being a traditional mobile-first company to an absolute AI data center powerhouse. The real structural story here, data center royalties literally more than doubled year over year in Q4. This is, without a doubt, arguably the single most important structural data point in this entire explainer. It puts the data center segment on a direct path to soon surpass smartphones as ARM's biggest royalty contributor. And that's a huge deal because the per-chip royalty in data centers is materially higher than what they get in mobile. Now, what's really interesting about this slide is the sheer economics of the architecture shift. When you compare the older ARMv8 royalty rate to the new ARMv9 rate, there is roughly a 2x step up, a 2x jump. This brilliantly illustrates how migrating to v9 literally doubles the royalty rate per chip for ARM. And here's the kicker. They don't even need to sell a single additional unit to see that jump. Every transition from V8 to V9 directly and heavily compounds their revenue. And the economics get even more dramatic when we look at their proprietary hardware. Think about traditional smartphone economics. They bring ARM roughly $1 to $15 per chip. Pretty standard, right? But their new AGI CPU, which, by the way, is ARM's first proprietary data center chip, well, that captures full chip economics of roughly $5,000 to $15,000 per chip. Just think about that for a second. That is roughly 500 times the per-unit economics compared to a pure IP royalty. It's like going from selling a bicycle to selling a sports car. And demand for this AGI CPU is already exceeding expectations as AI workloads become increasingly agentic.
Rounding out this entire shift is the custom silicon wave, and it's being driven hard by the hyperscalers. Just look at this massive lineup. We've got AWS Graviton, which already makes up roughly 25% of new AWS instances. We've got Google Axion, Microsoft Cobalt 100, and of course, NVIDIA's Grace and Vera. Every single one of them is running on ARM architecture. And it gets better for ARM. When these customers attach ARM's compute subsystems, or CSS, it actually compounds that per-chip royalty roughly 2 times over separate IP licensing. It's a massive, massive multiplier effect.
Section 4, risks and reality checks.
Okay, so we've seen the incredible bull case, but to be completely impartial here, we really need to take a grounded look at the bear case of vulnerabilities. The first major reality check is $1.26 billion. That's ARM's Q1 fiscal 2027 revenue guidance, alongside 36 cents non-GAAP EPS. Now, this represents a sequential step down from the Q4 record we just talked about. To be fair, this does reflect normal seasonality and the tough comparison against that massive Q4 licensing haul. But it absolutely means that if licensing doesn't re-accelerate in the second half of fiscal 2027, well, this massive rally could end up being overextended. On top of that, there are a few looming structural and market threats we've got to track. First, SoftBank owns approximately 90% of ARM. That means the small free float heavily amplifies stock volatility whenever there's a guidance miss. Then there's the multi-year threat of RISC-V open architecture. It offers a structurally attractive zero royalty value proposition, which is super appealing for cost-sensitive applications. Also, China geopolitics are definitely a factor. China makes up about 20% of ARM's revenue, and the legally separate ARM China entity adds some real governance complexity. And finally, NVIDIA completely divested its equity stake in ARM back in February 2026. Now, the 20-year licensing agreement is fully intact, but that equity sale was definitely a sentiment marker for some investors. But perhaps the biggest visible flashpoint on the horizon is the Q4 calendar 2026 Qualcomm royalty trial. This is viewed by a lot of people as a pure binary risk. Qualcomm is ARM's largest customer, and an adverse ruling here, that could completely rewire the smartphone royalty model. Any renegotiation or pricing pressure with major heavyweights like Apple, Qualcomm, or MediaTek can absolutely move quarterly royalty in a meaningful way. Section 5. What to watch next? So if you're following this space, here is your explicit August 2026 Q1 print checklist. Long-term investors, you need to track these 5 specific metrics. Number 1, royalty reacceleration. We really need to see it break above that Q4 11% trajectory. Number 2, confirmation of the data center actually topping the smartphone royalty mix. 3, explicit unit and revenue disclosure for the new AGI CPU. 4, the actual outcome of that Qualcomm trial, whether it gets ruled favorable or settled out of court. And 5, the CSS attach rate across data centers and high-end mobile. All of this leaves us with one massive, lingering question. Will ARM actually maintain its AI infrastructure moat? I mean, they are entering fiscal 2027 with arguably the cleanest semiconductor IP setup in the entire AI infrastructure cycle. They're armed with the V9 step-up, those end-to-end AGI CPU economics, and a compounding custom silicon wave. But with premium valuations that are highly sensitive to literally any guidance miss, the market is watching very, very closely. It's an absolutely fascinating structural shift to witness. I really hope this explainer helped clarify exactly what is driving all these numbers. So keep your eyes peeled for that August print, and as always, keep learning.